Hello, I'm Martin Smith and this is your MaxiForex Week in Review. Let's begin today with this week's risers and fallers. The euro made significant gains versus the dollar. The euro's rally pushed the pair up 3.8% to close Friday at 133.72. The British pound also had a solid week against the dollar, finishing up 2.25% to close at 158.72. The US dollar traded mixed versus the Japanese yen. By the sound of the closing bell on Friday, the pair had chalked up a total weekly loss of 0.26% and last traded at 82.99. The Canadian dollar also had a mixed week against the greenback. The pair closed slightly down for the week, losing 0.33% and finished trading at 0.9892. Oil flexed its muscles this week, rising 2.85%, eventually closing at $91.54 a barrel. Gold, on the other hand, fell a little short, losing 0.7% to close just under $1,360 an ounce. Moving on to the week's headlines now. In Asia, China's recent action to control credit led gold to a one-week low, while oil prices continued to rise. US oil prices were helped with the rise of Brent crude prices to above $99 per barrel. In China, rising inflation is now the major concern. At the same time, President Hu Jintao is trying to relieve tensions with the US over the yuan as he prepares to meet President Barack Obama in Washington next week. The prices are climbing more rapidly in China than in the US, making Chinese goods less competitive in foreign markets. Chinese officials are also trying to find ways to speed up gains in the currency in order to fight off rising inflation. Hu is looking forward to easing the US ban on high-tech exports, while Obama is focusing on increasing access to Chinese markets by lowering subsidies for companies and cooperation on North Korea. On Friday, global stocks edged up with JP Morgan's heavy earnings pushing Wall Street even higher. Wall Street continued its rally with the S&P 500 making gains for the seventh straight week, following JP Morgan Chase's reporting a higher than expected increase of 47% in their quarterly earnings. US retail sales increased slightly but fell below expectations. Inflation remained stable, while investors were still encouraged by secondary data that indicated a modest recovery gathering strength. Retail sales for 2010 reversed 2 years of reductions, with the largest rise in more than 10 years. The Fed also reported an unpredictable 0.8% gain in output at US mines, factories and utilities in December, which is assumed to have been helped by the cold weather. The sales data was released last week in the US, reflecting retailers gaining 0.6% in December, following a rise of 0.8% for November. US Treasury notes moved slightly higher, with the 10-year note yield steady at 3.30%, representing an oasis of calm compared with the dramatic slide in US municipal bond prices. The sell-off in the $2.8 trillion US municipal bond market continued for a fifth day, driving tax-free 30-year bond yields to 5.01%. This perhaps reflected the nervousness of your investors about the insecure condition of local and state finances throughout the US. Over now to the Eurozone, and after a 4-month low of $1.2867, the euro advanced and continued rising, indicating the government's desire to do whatever is needed to support the euro. European inflation accelerated to 2.2% in December from 1.9% in the previous month. The European Union statistics confirm this. This is the fastest increase since October 2008, but is in line with the estimates of January 4th. The industrial output of all 16 countries that use the euro increased even greater than the anticipated 1.2% in November, reflecting hopes for a recovery in the eurozone. Report figures are likely to boost confidence that the eurozone economic recovery remains on track, though largely on the back of exports from Germany, which is Europe's biggest economy. The German economy was also reported to have grown in 2010 at its fastest pace since 1990's reunification. Ben May, European economist at Capital Economics, stated that the rapid rise in November indicates that the recovery in the wider economy will continue in the fourth quarter. However, in the third quarter, the quarterly rate of 0.3% was recorded in the Eurozone economy, which was way down from the 1% recorded for the second quarter, a time when Germany in particular prospered as global trade recovered. In other euro news, Estonia has become the 17th country to use the euro at the start of this year. Eurostat also reported that the 27-country EU, which also includes non-euro members such as Britain and Sweden, saw industrial production rise by 1.4% in November, up from the 0.4% recorded for the previous month. There was also news from Switzerland's central bank, where bank officials expressed concern over a record loss for 2010, where the euro crashed and eroded the value of Swiss currency reserves. This shortfall is an estimated 21 billion Swiss francs, that's $21.8 billion, which is about 4% of the size of the economy. The statement also said that the exchange rate-related losses were about 26 billion, with gold reserves having a valuation gain of around 6 billion francs. That's it for this week, and be sure to visit us at MaxiForex.ru.